All right, everybody, welcome to the Investors Podcast. I'm your host, Trey Lockerbie, and today I have back with me Benjamin Claremon and Eugene Robin from Cove Street Capital. So, guys, welcome back to the show.
Trey, thanks for having us. We're excited to be back.
Well, I couldn't wait to have you guys back on the show because last time you were here, which was about mid-December in 2020, we were talking about Lumen, which is one of your largest holdings. And back then it was trading somewhere around $10.50 a share. And then almost, shortly thereafter, it surged something like 50% up to 15.5 or so dollars a share. And it's now drifted back somewhere around 13, I think. But I just had to catch up with you guys really quick before we get further along in this discussion. What are your thoughts about that surge? How are you guys feeling about the stock? Let's just touch on that really quick.
Yeah, I'm happy to talk about that. So when we spoke, Lumen had been under a fair amount of pressure. We think, there's no way to know for sure, but we think that it was kind of a victim of the end of year tax selling to some degree, as people didn't have a whole lot of losses and Lumen was down. And so it got sold down pretty hard towards the end of the year. And then, I guess serendipitously, it got caught up in the GameStop kind of rush where people saw that it was heavily shorted and thought that maybe it could be the next GameStop. It didn't end up being quite that, and we actually sold a little bit above 16. So we and then we promptly bought it right back. So thank you, Mr. Market, and your irrationality for giving us that opportunity. But to be frank, some of the gap between what we perceive to be intrinsic value and the stock price has closed, but not nowhere near where to make it anywhere near fair value. So there have been a number of fiber transactions that would be good comparisons for the Lumen business side slash level 3, the old level 3 business. And they're suggestive of a much higher value for this company. And even a company like Cogent, which is a public company, trades at like 20 times EBITDA and has a very similar business model to Lumen's business services side. And it's 20 times for Cogent and 5 times for all of Lumen just doesn't make sense to us. And the fact is, since we've spoken, Southeastern, which is one of the largest shareholders and has filed a 13D, has continued to push the company to highlight the value of its various assets. A sell side analyst reported that the company has hired bankers to look at selling the consumer business, which is, you remember from our original podcast, that was one of our premises, is that they would separate these two businesses. So honestly, things are in motion. I think people need to be patient, but they get paid to wait because the dividend yield is like, I think 7.5 or 8% still. So, our conviction about Lumen really hasn't changed, and we continue to scratch our heads regarding the discount between comparable transactions and what we think the fiber's worth and what the stock trades at.
So a lot to unpack there. First of all, you mentioned you guys sold a little bit, bought some back as it fluctuated. What net, where do you guys kind of sit? Is it back to where you were and just took some money off the table, or have you kind of de-risked a little bit more?
No, I can just talk about the strategy that I co-manage, where it's our largest position. It went from a 10% position to a 15% position because of that. And so from a risk management perspective, I looked in the mirror and talked to my co-manager, who was our founder, about this. And the question was, if it was a 10% position at $8 and it's a 15% position and a 15% position at 16, what is a proper risk management thing to do? And our perspective is, you take some money off the table, because if the gap between intrinsic value had closed to some degree, and so you take a little bit off to risk manage, and then the stock promptly fell back. So it's still a 10% plus position.
That kind of raises another question, which is, as far as rebalancing, is 10% sort of the optimal range for you guys for any one holding?
This is an outlier. We look at this as a special situation. We think that the writing is on the wall that these assets are being separated. And the company has not come out and said so, but everything we see points to that. So I would say periodically, we are concentrated investors and we will take larger swings. Typically, our position sizes are 2.5, 5, and 7.5. 10% is this is the largest position we've ever had. It speaks to our conviction. It speaks to the amount of work we've done. It speaks to our understanding of what's going on, with management and internally. And so could there be other 10% positions in the strategy's future? Absolutely. But I mean, I would say this is not quote unquote normal for us. This is a big calculated, very asymmetric bet in our mind.
And people, the company might be not talking about the split, as you mentioned, but CEO Jeff Story, I think, did come out on the investor call saying he listened to the podcast, I think, and said, you guys know what you're doing. So alluded to the fact of our previous discussion, which was nice to hear.
Yes. So what the IR person told me is that Jeff Story listened to our podcast and has listened to it many times, and he sends it around to people. And what he says to people after, when they listen to it, he said, these guys get it, right? And so if you just think about our premise is that the consumer business and the fiber heavy business services side never necessarily fit together. And Jeff Story, when he originally sold the company to CenturyLink, always thought that there was an opportunity to sell the consumer business. And they looked at it in 2019. I think what they realized, and this was confirmed to me by the investor relations team, is that what they looked at it and they realized they didn't have anywhere near enough fiber in order to sell the consumer business. And so they've been investing aggressively in fiber since then. And they've gotten profitability up a lot. They've extracted some synergies, but they haven't done it in a way that you can't separate these businesses. And that was the important thing to learn, is that they've always had an eye on having the opportunity to separate the consumer business. And if you look at the multiples that some of these consumer businesses are going for, I mean, it's way higher than the whole company trades for. And we don't even bake that into our numbers, but there's a lot of upside if they can separate these assets. And we think it's just a longer process than a lot of people have the patience for.
And no one has a crystal ball, so let's be clear about that. But what I took away from our last discussion was, the stock was around $10. It sounded like the stock could at least double pretty quickly. And then as you confirmed, I mean, it shot up 50% shortly thereafter. Since it's around $13 today, it's only been a few months. So I'm guessing the assumption is that, that's still the range to maybe consider. Is there's still a decent amount of upside still ahead?
Yeah. I mean, Eugene, you want to touch on what you think the upside is?
Yeah, sure. We've dissected the business every which way you could possibly imagine. Luckily, they released a lot of financials for some of their subsidiaries like Quest and things that they issued debt for. So publicly traded debt always files SEC, financials. So we can kind of dissect out parts of their business. So whether you want to apply, private market multiples to the business services side, which is the fiber, it's more like Cogent, like an alternative to Cogent, or a competitor to Colt, which is another big firm out in Europe. So if you do it that way, I mean, you could get the value of the company and then some just for the business services side if you apply just like a private market multiple. Ben alluded to the fact that there have been many transactions in the fiber space, and I just encourage anyone just to take the business services EBITDA and apply whatever you feel is a fair private market value. You can even take a discount to it if you really want to be conservative, and you'll see that you're looking at somewhere in the 20s as a value for the entire company, and that's with valuing the legacy side, which everyone kind of hates, at 4 times. Which I think we have a saying here at Cove: anything in the world is worth 4 times. It doesn't matter what it is, even if there's a secular problem. So I think that's one way to look at it. You can look at it just going the other way. It's like, okay, well, if you look at what Frontier sold some of their assets for, or some of the more rural former CLEX and ILEX, like Alaska or parts of Cincinnati Bell went for, again, it's incredible. It's incredible that this company is valued where it is. Again, it's just, I think people don't like buying the good with the bad, and they just apply the bad moniker and paint the good with the same paintbrush. And I think that's really the opportunity. And I would discourage anyone from investing this way if there's no catalyst. But in this case, because unlocking that value it's an arbitrary process when it comes to like timing. But in this case, we think that our research indicates that there is a catalyst, and I can't tell you if it's tomorrow or a year from now, but it's coming. It's evident from all the pressure that they faced from various investors, including Southeastern. We believe that that value will be kind of illuminated.
Pun intended, right?
Exactly.
So for those who are new to this discussion, I encourage you to go back to our episode number 326, where we really go deep on Lumen, and you can kind of get a feel for the company that way, and learn a lot more about the opportunity at hand. But we had to touch on it, right? Because the performance was just stellar right after that, and looks to have dropped that back down to another kind of interesting buy point potentially. Something at the end of our discussion was really interesting, because somehow we brought up Viasat, which is another one of your largest positions, I believe. And we started just talking about it casually, and how Elon and Starlink have kind of entered the space as a competitor to Viasat. Now, I'm a longtime fanboy of Elon Musk, and I follow his companies pretty closely. And he seems to have this unstoppable advantage in the race for space domination. Given his fleet of reusable rockets that he can launch at will for a discount. And he's now introduced Starlink, right, which is this constellation of satellites to beam down broadband all over the world. And they already have hundreds of satellites in orbit. So from my outside perspective, it appears that he's only a short time away from producing billions of dollars worth of new revenue through this internet service. So why am I saying all of this? Well, basically because you guys hinted that the fact that Viasat, which is the stock that we are spotlighting today, is a vastly superior company to SpaceX and Starlink in this initiative. And that really caught my ear, and I've been wanting to learn more about it ever since. Now, I wish I had kind of listened to you at the time when you mentioned that, because it was trading around $30 a share, and it's now shot up to 60 and drifted back down to about 50s as of today, the low 50s. But I want to definitely spotlight this stock, because I think that's news to a lot of people who are very familiar with the Elon Musk PR machine, and maybe have only really heard about Starlink. So let's take the opportunity to learn about Viasat. And I just like to start with a quick overview of Viasat and how it makes money. Let's start there.
So I'm going to give the immediate spoiler alert, and then I'm going to pass it to Eugene to answer the meat of your question. Starlink has done incredible things with their launch technology, and so SpaceX has done incredible things with the launch technology, and Starlink has a pole position to be really successful in a lot of rural broadband applications. But the truth of the matter is, in 3 to 5 years, Viasat is going to be an in-flight Wi-Fi and military connectivity focused company. Rural broadband will be a competitive market where Viasat will have assets that can compete, not necessarily with fiber, but with whatever Starlink offers. And it will be a competitive market, just like DSL was, just like if you're in Los Angeles and there are 3 or 4 different fiber providers that you can touch, it will be competitive. But the success of Viasat over the next 3 to 5 years will be based on their ability to penetrate in-flight Wi-Fi globally and offer connectivity to the military that does not exist today, expanding the total addressable market well beyond what other people are even considering now. And now I'll hand it to Eugene.
Yeah, thanks, man. So I just wanted to clarify one thing. I do not want to for people to think that in any way we believe Starlink is an inferior product to Viasat's current Exceed product. I just want to say that, and also preface what I'm going to say with the following, that I believe Elon will be the only person that's successful within LEO, barring, Bezos throwing $20 billion at the problem. Because obviously, if you have unlimited, checkbook, I think you could do whatever you want, really, irrespective.
Leo meaning lower Earth orbit, right? I just want to spell that out for people as well.
Yes, sorry. Yeah, I try to avoid acronyms. Yes, a low Earth orbit. So, Jeff Bezos is also kind of in the game with Kuiper. That's his constellation. Certainly, if you really want to talk about advantages, I think he probably has the best one, which is money. It's almost an infinite, it's a rounding error for him, really, as opposed to Musk, as well as, Viasat. So I just want to say that up front. Like, I really do believe that they will be successful. I think that he's already successful, let's put it that way. And there'll be a part of the pie that's controlled by the LEO low Earth orbit operators, and there'll be a part of the pie that's controlled by the GEO or geostationary satellite operators like Viasat. And that's really how you have to think about it. It's unfortunate, but people think this is like a zero-sum game where there's going to be a winner takes all sort of thing where Elon's kind of advanced space capabilities allow him to win the entire pie. That's just not. It's impossible for many reasons, which I'll kind of touch on. But to answer the question I think you posed initially, which is how does Viasat make money, I kind of want to rewind the clock a little bit, and I will give the disclaimer that once upon a time I had a real job and I was a software engineer, and I actually worked at Viasat when I graduated from school. So when I was there, the part of the business that I worked in was the network systems group, and the actual core of Viasat from its founding has been within encryption and decryption technology, specifically for the military. So this isn't a company that all of a sudden woke up and said, "Hey, what we should do is get into military applications." They've always been there. That's been the core moneymaker from day one. They've actually been the displacer in that space. Mark Dankberg created a more advanced and niche product set within encryption and decryption, specifically for inline network communications for the military. And slowly over time, they became, they went from startup to disruptor to now a dominant player within that space for the DoD. So that's actually how the core of how they make money is that defense side. And then actually most people, when they look at the company, because all the glitz and glamour and headlines and all that is specifically on the residential broadband, they skirt over this, what we consider to be a diamond in the rough, or the true jewel, which is the defense side. And it's due to the defense side's high cash flow generative capabilities, Viasat has been able to develop everything else that they have. So that's actually the core of how they make money. Now, in conjunction to that, what they have is really a communications equipment business, which they sell ground network equipment to other satellite providers, actually. And so that's the one thing that's really interesting, because I think space tech is in this really interesting revolutionary kind of flowering point where, we're actually in El Segundo, and behind me, there's probably 36 startups right now, and all the large defense contractors that are in space. So kind of we're in the epicenter of it, and as more and more money flows to it, Viasat will actually benefit on the communication equipment side, because most people don't have the 25-year track record of building space reliable equipment that Viasat does, whether that be the antennas or the ground station networking equipment, or some of the more nuanced things that go into satellites. So that's one of the ways that they also make money. And then the other one, obviously, is the let's call it the satellite services side, which is, I think, where most people are kind of fixated on. So that's the residential broadband. They do that through their Exceed service. I don't know if they still call it that anymore, but and then they have in-flight Wi-Fi. So if you've ever flown on JetBlue or American, that's actually all powered by Viasat. It used to be powered by this company called GoGo, which Again, if anyone's ever flown and used GoGo, it's one of the worst services I've ever imagined. And then so the Viasat displaced them. And in fact, I think it's public now. So Delta officially signed on to have their entire fleet be switched over to Viasat through 2022, I believe. Anyway, so they have in-flight Wi-Fi. Then they have they call it community Wi-Fi, but it's a really interesting little niche business that they don't talk about as much. But if you go to Mexico or parts of Brazil now, they actually have basically these waypoints that they put in rural, very poor areas. They can beam down satellite connectivity to, and from that waypoint, it actually it distributes that connectivity to folks that can maybe pay $1 a day, roughly, for internet access. So they actually provide a scaled, cheap connectivity solution for folks that cannot get connectivity around the world. And then lastly, due to their acquisition of RigNet, they'll have a maritime business, which is both offshore oil derricks. They have tankers, cruise liners, things like that. All need connectivity. So when you're out in the middle of the ocean, obviously you're far away from any sort of wireless connectivity capabilities, and you need. People now want to be connected all the time, so Viasat will be that bridge. So that's kind of like I'm trying to go quickly over it, but that's the satellite services side. So those are like the three, I guess, legs of how Viasat truly makes money.
So let's talk about those legs, because Viasat's revenues are only a couple of $1 billion right now, but it seems like the satellite industry globally and connectivity and some of these other industries you mentioned that they're playing in, we're talking about hundreds of billions of dollars, right? So as far as market share goes, how do they kind of fit into the landscape? What would you say? Are they dominating obviously on the US government space? Do they have sort of a monopoly on that business? Just give us an idea of like their position in the space overall.
Sure. So let's start with the government system side. So if you look at their government revenue, they have about, let's call it, I'm just rounding up, 1.1 billion in total revenue. Most of that, maybe 75% of it, is on products. So that's kind of the things that I described in the network encryptors, the handheld portable radios that go to individual special operations units. There's the high-end encryption modems that get installed in like Blackhawks and F-18s and things like that. So that's the core of the product set within the government services. And they have what they consider to be the service line. That's while that's a catch-all, the vast majority of that is actually the connectivity side that they use their current satellite systems and also partner with others and resell to the government. So that is about 275 million. So tiny. And if anyone's interested, the GAO put out a report at the end of 2019 about the future military DoD use of commercial SATCOM versus kind of building it inside, and what should they do. Within that report, I believe the number is let's say 4 billion is what the DoD spends on paying other commercial providers for satellite connectivity. So Viasat, 275 million. The addressable market just for America's DoD, I'm not even talking about the UK or Australia or anyone else within our NATO complex, is 4 billion. Needless to say, there's a large runway from where they are today to where they can be. In case of people are kind of curious, like, okay, well, what does that actually mean? What does a connectivity service provider actually do for the DoD? Well, Viasat specific line item is actually Air Force One, Air Force Two. So they power our presidents when they fly around in Air Force One. They power the actual connectivity, encrypted, very hardened connectivity that goes into State Department airplanes. That's one of their biggest contracts. They also do special operations connectivity to SOCOM, and obviously I don't know specifically what that entails for obvious reasons, but they either use their current satellites, or most likely, given where special operations folks operate. They'll actually buy or resell effectively connectivity from an Intelsat or Inmarsat or SES, which are what I consider to be traditional mainline distributors of satellite connectivity around the world. And why that's important is because Viasat is trying to build a global constellation with their Viasat 3 constellation. Every time they cover a new part of the world, it actually opens up the opportunity to sell that connectivity to their defense partners. And as I just outlined for you, if let's say the market is $4 billion just from the United States, our own DoD uses, you can imagine that if Viasat has the contract to deliver connectivity because they happen to have the hardware that's doing it for that part of the military right now, they can just basically redirect connectivity to their own satellite. And now, instead of paying for kind of reselling someone else's revenue, they'll get that all coming to them. So, that's, I think, if you want to talk about the markets that operate, that's kind of the military side. Then if you go to connectivity services for broadband. So broadband, I mean, in the US, there's probably, if you aggregate Hughes, which is the other main competitor to Viasat right now, and Viasat together, you're looking at somewhere around 2 million users. Again, I'm just rounding. So there's 2 million satellite connectivity, internet users. Elon believes that market, not only that market, it could be his, which I totally understand and agree with, but also on the periphery of DSL. What's really DSL? Like, people use that term a lot, but the way that the government defines what's high speed DSL is basically only 25 megabits per second download speeds. Most of us here in LA probably have somewhere around 100. So you can, the point is, the actual true addressable market for high-speed connectivity for internet via satellite can actually be much greater. And I actually think that's one of the things that SpaceX truly gets, where it's not just about, hey, I'm in middle of nowhere, North Dakota, and I really need to connect, and I'd like to connect on a fast way to the internet, but also they can pick off people on the periphery of larger cities and things like that.
Well, I think I've heard, to that point, I think I've heard Glenn Shotwell, the COO at SpaceX, say that that industry is trillions potentially of dollars. Do you agree with that as far as like the TAM?
Yeah, I think either her or the CEO, I'm blanking on his name, of Telesat, I think he threw out 600 billion. I think the point is the pie is so massive that if LEO is successful, that doesn't mean that GEO won't be. Okay, and I think that's really what people misunderstand here. So they treat Viasat as some sort of weird short to the success of Elon, and we fundamentally disagree. And again, we'll run across some of the reasons why. But yes, I mean, if you think of TAM for broadband connectivity as anyone who has subpar connectivity, that extends to a lot of people who are even in populated centers. And I think that's actually why Elon is building what he's building. He's not building it. He's going to start out with the rural because that's the proof point, right? And that's the easiest thing to say, like, hey, look, it's working, and these people are hungry and starved for this connectivity. But I think his overall goal is going to have to be, if he really wants to make this economic, to go after some of the DSL users that are actually CenturyLink probably users and whatnot.
So you mentioned geo, so that's geostationary, right?
Okay.
And so talk us through a little bit, because look, it's easy to kind of get a quick sense that Viasat has been around for a very long time. And a lot of people's eyes, it could be seen as, I don't know, a dinosaur, if I'm, in the worst case, right? Compared to something like a SpaceX with reusable rockets that are launching these things up, let's walk the listeners through why the disruption of Viasat might be very hard for something like a SpaceX, or especially given the geo element.
Sure. Well, it's a great point that you made about Viasat being a dinosaur. And so let me just start there. in 2011 and 12, when Viasat 1, which was their first satellite that they built themselves, and well, with partners, but the first one that they launched, so it was provided high throughput connectivity. The actual term of high throughput satellites didn't exist. Viasat was in and of itself a disruptor of the geostationary business, because the typical geosatellite providers like SES, Intelsat, and Inmarsat didn't actually make anything themselves. They relied on Boeing Space Systems or Loral Space Systems to do the design. And because no one had pushed the envelope, everyone just kind of coasted on, a 1980s-esque technology. So Mark Dankberg came along and said, you know what, we can do better. And I think that there's a use case. It was more of like a Field of Dreams moment where, if you build it, they will come sort of thing. So, to him, he correctly surmised that if you built a higher throughput connectivity solution, given the fact that our society had already advanced to a point where everyone had these magic phones in their hands that are really powerful and everyone's always connected, well, if you built that connectivity, you would find willing takers for it. So Viasat 1 was actually the revolutionary kind of Starlink of its day, right? And no one believed that he could do it, and yet he did. So when he said, okay, well, we're not going to stop there, Viasat 2 will be, say, double or triple the capability of Viasat 1. Again, people said, no way, that's impossible. It's not going to happen. And sure enough, he did it. He delivered. Viasat isn't a dinosaur. It's actually specifically on geo, it's on the leading edge of geo. And in fact, if Mark is correct about the, let's say the 4th generation, because he's already says things like 8 terabytes per satellite, it will be the equivalent of every one satellite currently in existence in geo or being planned times, let's say 4. Just think about that. 1 generation 4 satellite will be that. So the point is, Viasat continues to iterate and develop and leap ahead of all the competition that they have in geo. I personally, this is our premise, that if geo was left alone and had no LEO competition, Viasat actually would eventually dominate and own 99% of it, unless we had some national champions that were kept around just because France wanted to have their own or whatnot. But the technological progression there was such that they were starting to get to an inflection point of just opening up a wider and wider, evolutionary advantage versus their competitors. So let's put it that way, right? Now, when you talk about comparing that to what Elon's doing of LEO, so one, people need to understand the true difference between geostationary and low Earth orbit is the low Earth orbit side of LEO means that they're at let's say 550 kilometers above the Earth, which means that just physics, right? The speed of light travels a certain amount of time, and so you can get 25 millisecond latency. So just how fast it takes your uplink and then for it to hit the satellite and come back down as a downlink. So geostationary is much, 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 much higher up in space. And so that means that the average ping or the average latency becomes somewhere around 400 to 600 milliseconds. Massively different. Is that really important though? It is if you're a Twitch streamer or a gamer or a heavy Zoom user. So if we were doing Zoom over Viasat service, we'd obviously have a lag and a delay, which is annoying. You could do it, but you'd have to pause and for a split second, and people don't like that. So there is a more advanced use case for LEO that GEO just cannot hurdle over right now. And it will never do so, just because, again, physics being what it is what it is, right? So I think that's really, if we talk about the differentiators of LEO service versus GEO, that's what it comes down to. It's whether or not you're doing live video streaming. If you're just consuming bandwidth when it comes to browsing around the internet or bringing up Netflix movies, whatever, YouTube, it doesn't matter. It really, I mean, it's indiscernible in the way that they've kind of optimized the way that they cache things down at the modem level. It's not a big deal.
Sorry, not to cut you off, but in other words, so I understand correctly, Starlink is very focused on the lower Earth orbit, or the LEO side of the business. Viasat has a lot of assets on the geostationary side of the business. Not that they don't have LEO as well, but they're primarily focused on geo. And is that harder to disrupt?
So they do not have a LEO connectivity solution that's consumer or business facing. They actually have a trial with the Air Force building LEO satellites for maybe a military constellation, but they do not have anything on the LEO side. They've been okay to. I think there's a plan. I think they have a 430 or something like that satellite constellation that they could launch themselves, but they have historically claim that it doesn't make economic sense for them to do so. Their main reason why is because geostationary is a singular satellite, right? There's like 1,000 of them. There's just one. Viasat has 2, and eventually they'll maybe have like between 6 and 10. So that one satellite though can take its beams, and just think of them as like spotlights, and divide them up into many other tiny beams, and then steer it. And this is the thing that Mark pioneered. Steer that beam into the highest bandwidth kind of the demand area that they have, which means that one satellite can effectively, if you sell it correctly, utilize 90 to 95% of its overall capacity. Okay, right? So you have it's sitting up top, it doesn't move, it just says, okay, there's more demand over here, so I just steer the beam that way. LEO, by its design, is actually their satellites are much smaller. They're speeding across the sky, never ending, always orbiting the Earth, and so if you think about the flight path of a LEO satellite, most of the time it spends over uninhabited parts of the world. Our world's 70% water, so it's beaming satellite connectivity to absolutely no one.
Fish.
Well, yeah, I mean, this is actually the interesting point too I want to make. So we can get into like the more technical aspects of what Elon has to hurdle over, but one of them being, if you're a LEO connectivity provider and you're trying to, let's say, provide connectivity to a plane or a ship in the middle of the Pacific, you can't. Even if you're over them, the reason why is because there's no way for you to beam the request by the user on the ground or in the air, in this case, back down to Earth and into the actual internet without having something called base stations. So in the middle of the Pacific, you can't have a base station because, well, there's no fiber, it's impossible for you to connect.
So how do the airplanes then going over the ocean have Wi-Fi coming down, obviously from satellite with Viasat? How are they getting the
right? So because geo, just think of geo as again like a big flashlight, right? It's shining on this part of the Earth. Well, that flashlight also sees base stations, as opposed to LEO, which is much closer to the ground, and so its view angle is constrained to I don't know the specific design of Starlink this well, but let's say it's constrained to like a 50 square mile radius, right? If it doesn't see a base station within its view angle, then it can't actually communicate with the internet, right?
Got it. So on that point, how much, in your estimation, does SpaceX truly pose a risk to Viasat? It sounds like they are going to really take over this rural total addressable market, if you will, for people who aren't connected to the internet. And you guys seem okay with that, right? That doesn't seem to encroach on Viasat's turf that much. I'm wondering, does SpaceX and Viasat actually benefit from each other in any way in this regard?
So a couple things. One, I actually don't think that he's going to win I said 2 million rural users. I actually don't think he's going to get to 2 million. I think probably 400,000 is what he's capable of really serving really well. If he sticks to the 100 megabit per second download speeds and unlimited actual capacity, which I have a high, I don't think he'll do that. I think he'll actually amend the plans if he gets really successful, and they'll degrade the service. But anyway,
how many satellites would that take? Also, because he's talking about hundreds of satellites going into space.
I think 4,400 that he's now okay to do at about 550 kilometers will allow him to do about 400,000 to maybe 500,000 users in a quality service, right? And I just want to have people understand. So because the satellite is what it is, right? It's fiber. You can have multiplexers that you can swap out, and you can take one strand and subdivide it into 1,000 strands, and it's all done by both software and also hardware on the ground. And it's very like adaptive, meaning like you could swap equipment out every month if you want, right? LEO satellites you can't do that with. So once you launch them up there, to refresh the entire system would take you a year to 3 years, right? So think of the satellite as like a fixed amount of bandwidth, and you can take that bandwidth and slice it up and dice it up among a bunch of these users. But then you have to start making trade-offs between capacity and actual speed. So if you're not, right now he's serving 10,000 or 40,000 users, and people love it. If you 10x that, can you have the same quality of service? Maybe. If you go 20x that, I don't think you can. Just it's physics, right? I mean, there's a certain amount of capacity that he has to use. He can divide it up among all the users. If there are too many users, then he has to degrade the quality of the service. It's kind of like our cell phone towers, right? If there's 10,000 people connected to one tower, it's going to be like you're on 2G. So
it's the opposite of a network effect in that regard, right? It's ironically given the name, but it's like the more people using it, the less.
That's exactly right. Which is why, Elon has said like, hey, I want to get to 40,000 satellites. And why does he say that? He's not saying it for like, just for fun. He actually needs to have the density of those satellites in order to provide the same service to more and more people. Because again, at any given point in time, if you're going to be a Starlink user, you're going to be maybe seeing 2, maybe 4 satellites above you, right? And each of those satellites is small, and technically, if you really want to get down to it, can serve maybe 500 people. So if you're in a rural area in Iowa with 20,000 people who really want connectivity, physically speaking, he can't capture 100% of the market. I hope that makes sense. Like he'll do really, really well, but if he wants to get 100% of the market, he's going to have to degrade everyone else's connectivity, which would then make it be on par with, or even worse than like what Hughes or Viasat can provide. So there's a limit to how much he can win, which goes back to our point, which is not a winner takes all pie. It's going to be Elon and Starlink have, this nice slice. Viasat has this slice. Hughes has this slice, and declining. But they're going to win in some way, right? And I think you also asked, like, can they help each other? There are network effects in the sense that his promotion machine is so great because he's advertising for satellite connectivity in general. And what is that going to do for providers like Viasat who can, let's say they can, septuple the quality of their service over the next 3 years, just by providing more and more bandwidth? I think they'll be able to ride on the coattails of, this great PR machine that Starlink has, and saying, hey, if you want 100 megabits per second, we could also do that. And let's say that we're not going to charge you $500 for the equipment. We're going to charge you 25 or 50, maybe even give it to you for free. So that I'm saying that there are helpful of things that come along with Elon being who he is and the great salesman.
Okay. So, as well as a race to space, are we talking about a race to the bottom as well? Meaning that all this capacity coming from space in the near future, does that just like crush the price of internet? I mean, are we going to be paying any pennies for connectivity? And is that actually have a negative effect on these companies' revenue streams?
Great question. Think of it this way. I don't think the price of internet, have you paid more for your internet since 1998? I don't think so. I think most people have paid between $50 and $120 for the longest time ever. And you can, they'll run promotions, you'll threaten to switch over from Spectrum to Dish or whatever. But in the end, the price has been relatively the same. What's actually changed and plummeted is the price per bit delivered. And that's the key here. So when you think about who's going to win in the future, it's going to be the person with the lowest price per bit, because in the end, connectivity is a commodity. You don't care as a consumer whether you're the military. Well, maybe I should caveat that maybe
Encryption, right?
Yeah, right, exactly right. But let's say you're a maritime consumer, or you're a backhaul consumer, or you're just a regular a consumer at your house. Like, you don't care really who it is. You just want good service. You want the most of it, and you want it for the cheapest price possible. It's very simple. So what does that mean? That means that the folks in the satellite space with the lowest cost per bit are going to be the dominant players. And again, if you think about the overall capacity as you see this pie, your overall share of the revenue attached to that capacity will be your equivalent share of the capacity pie, right? I mean, if you're selling a commodity and there's really no differentiation, a bit is a bit, then your share of that pie will be dependent upon how good is your actual space tech. And so I think this is exactly why we believe that Viasat will provide a larger than current slice of the pie in the future. And also, I really do think that Musk and Starlink are correct. That pie will grow. And the more and more capacity and connectivity that there is up in the sky, more and more use cases will show up. And then you'll start seeing crazy stuff like, sensors around, I'm just making things up, like instead of building a wall, why don't we actually employ sensors for border security?
Or does the Starlink have a vertical almost integration with Tesla vehicles that are obviously getting connectivity on the highways and stuff? Is that part of the benefit? And is there like almost like a longitudinal, like what I'm trying to say is basically, is there an advantage that is going to benefit Tesla in some way from having these satellites in space?
It's funny. I believe that Starlink has told its users, beta users, to please do not take the satellite dish and drive around with it on top of your truck or whatever, your Tesla, or we'll actually turn it off and take it from you. But that's ending, I'm going to say in June. I think they put something out where they're going to allow their users to be mobile. Because I think, again, one of the sneaky things that he's going to do is, I think he will integrate the service in some way. I think that's how he thinks, with Tesla, and it will be kind of like the I don't know, like the Sirius sort of, hey, I bought this car, it has Sirius radio already pre-installed. It'll be, hey, I bought this Tesla, it already has Starlink pre-installed. So,
meaning like now you've got your full self-driving on the highway, and now you've got Netflix streaming on your car perfectly. Exactly.
And again, I think one of the limiters to truly having autonomous vehicles is connectivity and sensors. And so, if you're out in the middle of Arizona, your car needs to have some sort of waypoints that are pre-programmed and downloaded onto it and are adaptive. And I think the connectivity will, if you have a higher throughput connectivity solution, I think that will enable things like that. Like I said, there's things that higher end connectivity through space that we haven't even thought of that will appear. And I think that's, really the long-term business case for Starlink and Elon too.
So speaking of Tesla, Ben, Tesla seems to be holding the crown for like the major ESG company on the public markets right now, but I've heard you say that Viasat is the ultimate ESG company. And I would love to know why. Can you elaborate on that?
Yeah, I mean, I've said that a little bit facetiously, but think about it this way. So, how many years ago did Google, with their Loon program, where they're putting hot air balloons up in the air and trying to beam connectivity to poor areas where that weren't connected, or Mark Zuckerberg of Facebook saying that he was going to connect the world's poor, and Elon talking about it as well. Viasat is already doing that through their community Wi-Fi business. And so if you just look at what they're doing in Mexico, as Eugene described, they already have a profitable business that beams satellite connectivity to a central basically little ground station, and then that Wi-Fi is then dispersed at the town square where people can actually use it. And these are people who have never had connectivity before. So calling it the ultimate ESG stock is I think a little bit overstated. But the truth of the matter is, you read all these articles about, look at these great companies trying to connect people. Viasat is already doing that. And so they have a pilot in Brazil, they have a business in Mexico, they're already doing North Africa. When the 2 satellites come out in EMEA and APAC, there's going to be an opportunity to connect millions, if not billions, of people who, through their community Wi-Fi business, that have never had connectivity before, right? So if you believe that a good way to raise people out of poverty, a good way for people to be connected to the world is to have internet connection, then Viasat is, a really good social sustainability company. And, it will also be a good business model for them, because what they're trying to do is they're trying to fill up the capacity. And so I think one of the things, and Eugene's kind of touched on this, but one of the things that people are always looking for is they're looking for some silver bullet. They're like, well, what's the one thing you're going to do to fill up the capacity? With Viasat, it's everything. So they're putting up these 3 Viasat 3 satellites, one over North America, one over APAC, and one over EMEA. APAC and EMEA, our sense is that they're going to be heavily weighted towards the military. If you just think about what our U.S. military cares about, they care about what's going on in the Middle East and North Africa, and they care about what's happening in the Pacific. And so, listen, there's not going to be any Starlink with base stations in China. You're not going to put physical base stations in China. So you have to have a high throughput geo satellite if you want connectivity to our troops or our Marines or our Navy in the Pacific, right? And so the military's, our sense is that is going to take up a fair amount of the capacity in those satellites. But then there's just so many other ways to win, right? There's global in-flight Wi-Fi, which we haven't talked about. So Eugene already, made the joke about GoGo and how bad it is. If you fly JetBlue right now, you'll see a better experience than anyone else is offering with the Viasat service. But let's be clear, that's the Viasat 2 satellite. When the Viasat 3 satellite is up in early 2022, you're going to see much better in-flight Wi-Fi, and it's going to just, our sense is that whatever Global Eagle and GoGo can offer, it's going to be not even anywhere near what Viasat can offer. But then when EMEA and APAC are up as well, those satellites, you're going to have global connectivity. So you're going to be able to fly from New York to Tokyo, and you're going to have connectivity hopefully the whole time. Obviously there could be intermittent outages, but you're going to have, when the APAC satellite's up, you're going to be able to have connectivity the whole time. That is a business that doesn't exist today. No one who's flying from LA to Tokyo right now has connectivity. Right. And so that's, when you think about the TAM expanding, Viasat, as it Field of Dreams. Like, if you build connectivity through in-flight Wi-Fi that's global, people will come. And so when you have in-flight Wi-Fi, you have some rural broadband, and you have the military, and then you have community Wi-Fi. Our sense is that they're going to have no issues filling up this capacity, because use cases are going to be that haven't existed yet, and people who have never been connected will be connected. And you asked us a question, like, well, there's all this capacity coming out. I mean, I just read the Charter call today. I mean, they're talking about some of their, I think the average user for Charter fixed broadband is like 700 gigs a month. And then there are, and a lot of their users are now using over 1,000 gigs a month. I mean, it is unbelievable, the demand for bandwidth. And where's that coming from? It's coming from video. It's coming from gaming. I mean, think about it. People used to be watching TV. Now they're not. Now they're streaming everything. And you can't stream if you don't have an internet connection. And so what that's doing, and video is takes a lot of bandwidth. So we just think that the total addressable market for and demand for bandwidth is growing so much faster than any amount of capacity that Viasat can build.
And can I just add, sorry, Trey, just one real quick, just some numbers behind, I think what Ben made a great point about the in-flight connectivity opportunity. So right now, Viasat serves about 1,380 planes, but I think actually not all of them are in service for COVID reasons, yes. But before COVID, at 1,380 planes, I believe that business was roughly, they don't disclose it, but I've backed into it, about 200 million in revenue. And they currently in their backlog have enough to effectively almost double that, okay? In their backlog, I'm saying with their Delta wins, with some of the KLM wins that they've had, some of the more international players, when they go internationally and do transatlantic, trans-Pacific flights, those customers are sometimes 2 to 4 times more valuable than a domestic US customer, okay? So the actual addressable market for in-flight connectivity could be, the moonshot would be $1 billion, but I don't even think it's a moonshot, because honestly, you're talking about that's probably 6,500 tails, 6,000 tails. And they're already on track to get to 2,500 from what we can see today. And that's without the APAC connectivity in place. That's without most of the African continent in place, and without any of the Indian Ocean passages. So, I mean, the actual numbers here are so immense that that's the true business case for Viasat to continue to build these things. And I will add that for the equivalent consumer, I would rather have 1,000 tails than 500,000 consumers. The reason why, those 1,000
tails meaning, sorry,
so meaning planes. Sorry.
Okay.
Sorry about that. So 1,000 planes, I'd rather have that than 400,000 or 500,000 consumers, because those 400,000 to 500,000 consumers have a natural churn of about 2.5% to 3.5%. The planes have 0. So the actual cost to get the same profitability levels for in-flight Wi-Fi are that much greater than having a consumer broadband business. And by the way, Starlink and Elon, they know this. They're not going to just let other people take this market. They will get there eventually, I believe. I think it'll take them longer than I think they think. They have to have FAA clearances to get their equipment on board. Actually, I don't think they have air mobile ready antennas currently developed. But anyway, so the point is, like, for the addressable market for Viasat and their growth trajectory on the in-flight connectivity side itself could make this company into a call it the $5 billion or $6 billion entity just by itself, without having any of the military or commercial aero side, so commercial residential side.
Wow. Amazing point. Let's talk a little bit about the risks involved, because you mentioned all of this capacity coming online and you mentioned Starlink's tens of thousands. I think you said 40,000 satellites going up into space. My tiny human brain is making this assumption, like, that sounds like a lot of satellites, and that's going to clutter our skies. And, there's inherent risks to that. If I step back, it's probably like, space is infinite. The world is very large. That's probably negligible in the grand scheme of things. Is there any risk to putting this much material up into our, stratosphere, basically?
Well, it depends who you talk to. So obviously Starlink and Kuiper, they say no, with a caveat. The caveat being you need to have good, what they consider space junk, management schemes. And you need to have good, like, collision avoidance systems and be really good at tracking things. Just to clarify, though, for your listeners, so Elon has, I think, 4,400 is the FCC OK number. It's not 40,000. So he wants to eventually get there, but that will take another round of regulatory approvals and years of study and blah, blah, blah. So, I think for what he can accomplish today, they'll still be very impressive, but it's not going to be 40,000. One of the things that people push back on them on was like, well, if there's a collision, you might actually cause this cascading effect of just destruction in space, because if you can't, if you have so many things crossing
The
orbit,
domino effect, right?
exactly. Yeah, you might actually, and it's a Kessler syndrome. Sorry, and there's actually a term for it, where a satellite that's out of control that causes one collision can actually cause an infinite number of collisions, and then that space junk that is left behind that you can't control anymore will basically make that band of the Earth's atmosphere inoperable for all satellite connectivity or solutions in general, which would be really, really bad, because it's not just about SpaceX, right? We have the International Space Station there. We have various other countries have their own satellites, whether it's spy satellites or whatever it may be, orbiting there. So you have to think about the world, not just yourself. So there's certainly there are risks there, but at least our FCC has deemed it irrelevant when it comes to Starlink, because they literally this week approved the 4,400 to go up, so that will happen. There are many other, I think, risks in general, and this hasn't the 4,400, once it operates for a couple of years, and if they can show that it's safe, then I think the regulators might relax a little bit. But I think up until that point, you still have, I'm going to guess, 4 to 5 years before they allow him to do anything more than what they have right now on the docket.
All right. And I've heard you talk about the government side of the business for Viasat, and that it could make up as much as $46 a share just on its own. And obviously the stock's currently just in the low 50s. So that's a lot. That's the majority of the share price right now. But, I'm curious how, the assumption sounds like Starlink is not going to come after that business, mainly because Viasat has this really long-standing relationship with the government, and that its encryption technology is very strong. But all of those things sound like if I'm thinking about Elon Musk and his relationship with the government, as well as his ability to create encryption in other ways or advanced technology in other ways, that doesn't sound that defensible to me if he's coming after it. Do you guys look at him as a risk for coming after that government business at all?
I don't think that he's going to go into the hardware side. There's actually a ton. The moat there is much greater than I could even possibly describe, because it's not just like you're making hardware, right? Because you're going into a highly regulated environment where you have to have NSA Type 1 certifications for a lot of the equipment. So these aren't like, oh, let me just slap together something and commercial off the shelf it, and voila, I have a government contract. These are boxes that have been pre-cleared and tested with a lot of the alphabet agencies, and NSA being the primary one, that allow for hardened, jam-resistant communications in the middle of war. And trust me, the military doesn't move quickly when it comes to changing over providers, because if someone's coming along saying like, I can do this better, because in the end you have to prove that you can operate in that hostile environment. And what Viasat has is 3 decades worth of proving that they're able to operate in those hostile environments within an encryption and compression algorithm that allows for incredibly high throughput amounts of data to go through the typical warfighter's hands. I'm not worried. I would put the chances of him getting to the product space at 0. I think obviously connectivity, there's going to be again, I don't want people to think like I'm naysaying Starlink in any way. I do believe wholeheartedly that he will provide some connectivity for certain government solutions going forward. Again, just from the GAO report I mentioned, it's $4 billion today, right? That market. So again, can Viasat win 20% of it and get 800 million revenue from their current 275? I think so. Can SpaceX, get their share? I also think so. There's enough here to go around, let's put it that way. And in the end, they serve different use cases, and that's really important to understand. Again, if you're a geostationary provider and they need connectivity for whatever reason, in the middle of the Southeast, South China Sea, I'm going to guess that you're going to get the call and not the LEO person, because the LEO doesn't have secured I guess offload points or no gateways that the DoD would trust. I know people's like, oh, well, he's going to put floating barges in the middle of the Pacific. Okay, you try to sell that to an admiral who's like, wait a minute, I'm going to be reliant on something that could be sunk with a submarine. How explain that to me again? So anyway, there are a lot of advantages that Viasat has to protect itself from the defense side, and honestly, they're a drop in the bucket right now when it comes to the connectivity revenue from the DoD, and I still believe people totally miss that point. They completely don't understand how competitively positioned they are for the future, with the caveats being that they need to have the global satellite network up. So those two ones that come after.
And that's the Viasat 3
correct,
constellation.
yeah.
And when is the debut of that? Like when should we expect that to be in the sky?
The first one, which goes over in North and South America, effectively the America satellite, comes up in, well, the launch should be, they say calendar Q1 of 2022. So call it, it's 8 months from now, 7 to 8 months from now. And then you should start seeing revenue within, 12 months.
And in your opinion, the market is just not pricing that in.
No, not at all. In fact, this has been the history of Viasat stock. We've owned this in different sizes for 6 years, and in between the first satellite and the second satellite, there was a lull, actually caused by SpaceX, because SpaceX was going to be the launch provider for Viasat 2, and if you guys recall, they had an issue with a couple of their rockets blowing up, and so they canceled all launches for like 4 months until they figure out what was going on with the rocket systems, which caused this massive backlog of satellites companies who had to be pushed to the very back of someone else's line. So Viasat contracted it out with Arianespace to do their second launch and had to wait an extra year and a half effectively. So, and then that lull, right? I mean, people, and that's when the initial shorts came out, and Kerrisdale did a great piece and attacked it at exactly the right time. And people said, oh my God, this is a terrible company, they'll never grow because the rural broadband is getting eaten by 4G and whatever. The 4G was the boogeyman back then. And so, we suffered for 2 years, looked like idiots. And then the satellite was launched and revenue started increasing and the cash flow started coming through. And all of a sudden they went into the 90s. And I think the same thing is happening right now, really. I mean, it's just, Starlink is the new boogeyman. But that boogeyman is much scarier because he has much better PR, and so I think we believe that there's a good buy point even today for someone who has longer than a 2-quarter time horizon and can wait out the volatility. We believe that they will be rewarded with a much higher stock within the next 2 years.
Got it. And Gwen Shotwell, I was mentioning, the COO of SpaceX, has mentioned that, obviously their core focus with Starlink is consumer based, but she also mentioned that, while SpaceX might not be a company that makes sense to go public, Starlink could be, meaning they could spin that off potentially and take Starlink public. So I have to ask, if that were to happen, is that a stock that you guys would be looking at pretty closely and even investing in?
It depends on what the price is. I mean, we're cheapskates, and value guys, we have a problem with cracking open the wallet and paying for growth. I will say that I almost guarantee you that if Starlink were to go public, there would be an immediate long short trade where people would go long Starlink and short the traditional providers, which unfortunately I think Viasat would be lumped into that mix. It would be to people's detriment, but I think that would be the natural thing that someone would do. I highly doubt that they'll do this in terms of the separating it out, because I do I like Elon and his like bravado, I guess his chutzpah, his ability to like just will things to happen. But one of the things that I think one of his core beliefs is he needs to go to Mars. He can't raise the money to go to Mars without Starlink as part of SpaceX. No one's going to give SpaceX money to go build a cool rocket ship to go take
right.
people to
Starlink is his AWS kind of feature.
Exactly. I think Starlink is going to fund his other adventures in space, and I think he totally understands that point. And I don't know why they would separate out the companies. It doesn't make sense from a fundraising perspective. So anyways,
I'll also jump in there just quickly and say there's no way Starlink is making money right now. Now that hasn't stopped anybody from going public, especially if there's a SPAC involved. But I mean, let's just think about it this way: to be a Starlink subscriber, it is like $99 a month, and then $500 for the dish. We've seen estimates for the dish that you put on your house of $2,000 to $3,000 in cost. So they're selling it to you for $500, and they're paying $2,000 to $3,000 just for that. Plus, their cost of their satellites, which we haven't even talked about, is astronomical, especially like on a per bit basis compared to what Viasat can get for the Viasat 3 constellation. So my guess is that Starlink is bleeding. And now, I mean, just like with Viasat, there will be an inflection point at some point if they get enough users.
Well, let's talk about that and not making money, right? And let's talk about the Viasat financials, because they are also not making earnings at the moment, and their free cash flow has been pretty abysmal. And I don't know if that has to do with the acquisition you mentioned, but talk us through how we should think through Viasat's financials and where the earnings are going to turn around.
Yeah, so looking at the income statement is difficult. I think you have to focus on the cash flow statement. And as Eugene always says, you have to look at cash flow from operations, because they're going to continue to spend on satellite CapEx, because Mark Dankberg and the team see this gigantic opportunity to basically revolutionize, again, the geostationary world, and to, as we've talked about, increase the total addressable market by providing connectivity that didn't used to exist. So right now, we're literally near the bottom of their financials, because in-flight Wi-Fi has been crushed by COVID, right? Nothing having to do with them. They've been spending a ton on R&D to finish the Viasat 3 constellations, and I guess they're already spending a little bit on Viasat 4. But if you just think about a satellite, you build it and you look the most levered and the least profitable the day before it launches, and then it launches and you get to reap the benefits. So it's just like a piece of real estate, right? You build a building, right? And you have all this debt and you have no revenue until you start to lease it up. So think about that. And so basically, over the next 18 to 24 months, they're going to launch 3 satellites. They've already spent the majority of the CapEx for the Viasat 3 constellation. And so you're going to see a cash flow inflection point happen in our estimation very quickly. And so here's what's really important about that, is that with just Viasat 1 and Viasat 2 up, they weren't particularly self-funding, right? They would have to take on debt in order to build a Viasat 3 complex. Now, when those 3 satellites are up, and if they're as successful as we think they can be, Viasat will be self-funding from then on, and will be able to fund the Viasat, the 4 constellation over time without taking on equity or debt. They've just been a little bit subscale, because remember, as Eugene said, they got into the connectivity business in the early 2011, right? This was a core military encryption company until Mark Dankberg decided that they thought they could completely disintermediate the traditional geo world. And so I think they benefit significantly from having more scale, more total free cash flow, to be able to fund whatever adventures, whether that's a LEO constellation for the government, whether it's their own LEO constellation for consumer broadband. They're going to have the cash flow. But our point is that you're just not going to see it right this moment. And so into this, really, as Eugene said, people have underestimated Mark Dankberg at every turn, like they have to Elon, with Elon to some degree. But you're going to see, in our estimation, the cash flows turn around, the leverage come down, and the profitability rise significantly as these satellites are launched. And that's going to, in our estimation, change people's perception of the stock.
I hate to even bring it up, but it seems like a key indicator these days is Cathie Wood, and she's launched a space ETF recently, but Viasat's not included. Why do you think that is?
Cathie has bad analysts. Okay. I don't know. I don't actually, I sent her an email like, hey, curious, why leave out a couple of people, and Viasat being one of them. I mean, she has things like, Raven Industries, which we've owned before, and I would say stretching for this connection to space, it would be
Netflix, for example.
Yeah,
Netflix is a space company.
I mean, I understand I think their point was like, well, things that will benefit again from more connectivity. I get where they're coming from, but I think it's, whatever. I don't want to talk about ARC really, because I don't know how they decide on what goes in there or what doesn't. The only thing I could really say to people is that if you want to, if you were to create a portfolio of let's saying, there's going to be a space, a spot for geostationary satellites, and there's going to be a spot for LEO satellites. If I want the best in class geostationary player, I would buy Viasat, and if I wanted to balance that with the best in class LEO player, I would, if Starlink was public, I would buy Starlink, and that would be my space portfolio. And everyone else, I don't care about, because those two entities have competitive advantages that other people don't have, and they're going to crush them in the end. So I think that would be my own Cathie Wood portfolio and how I would have positioned it.
Well, this is what I love about you guys, because, of all the value investors I know, I mean, you guys are in these trenches, and I've just loved watching you guys with Lumen and now with Viasat. I mean, these are companies like, if I use my own tool on our TIP finance website, it's not very compelling, right? The free cash flows on this thing are pretty negative, and without doing a ton of research like you guys have, it's not something I would even probably consider. But you guys seem to be well positioned for these turnaround moments where these things, like you mentioned, unlocking the value. And that's really what it is. It's this game of, with value investing, right, is we're doing this research to unlock this hidden value that the market isn't seeing. And so I take your opinion with I really highly weight your opinion, especially you, Eugene, because you have so much experience with this company in particular. But with all that said, I have to wonder how your experience might bias your opinion on this, right? I mean, you're very close to this company. And I'm wondering what would convince you guys, on the flip side of buying, what would convince you guys to sell Viasat? What would you see and be looking for to say, okay, this is the time to let it go?
Yeah, I think that's a fantastic question. And I will spend some time plugging Cove Street, because I think it's a great segue, because, we have a robust, we call it the devil's advocate process. So typically a position has two longs and one short, and we assign people the short. So you have to come up with, every single reason under the sun that our key variables on the long side will not be, will not happen. And you have to bring, evidence-based data to back up your assertions, right? And so luckily in Viasat's case, there's not two long, one short. It's only one long and then everyone else short. So I'm 150% aware of my own ingrained bias. I do, I'm the first one to admit. So you I think you described yourself as an Elon fanboy. I'm a Mark Dankberg fanboy, because I worked for the man and I understand the culture within Viasat. I love that company. I truly do. I have nothing but good things to say about it, and I'm the first person to admit that I am 100% biased. And I will defend it. But I'm also not. I understand the tunnel vision that I may be subject to, and so I look for disconfirming evidence, and that's the key. You can be a fanboy, but as long as you look for disconfirming evidence, that's how you maintain rational sanity. And Ben and Jeff and Andrew, another one of our colleagues, they keep me grounded because constantly, and Viasat's one of these stocks, I get 3 to 5 emails every week from these guys saying like, hey, did you look, did you look at this? Did you look at, this is what Ars Technica is saying. Oh, look, they just did a breakdown of the dish. And so your question was what would cause us to sell the stock? It's a fantastic question. I will say that over the course of the last 2 years, what's really changed is I took the probability of Elon's success from like a 30% chance to 100, and I adjusted our model, the assumptions of like residential broadband growth and revenue contribution from it accordingly, right? Because again, I don't want to have my head in the sand. I mean, this man is doing great things. He's literally building a massive network that has never been seen from scratch, and he's already built it. It's not building, he's built it. So I don't want to be saying like, oh well, that's not going to affect Viasat. Of course it will. I mean, that is, you would be a maniac to say that there won't be some knock-on effects, right? And so certainly within the residential broadband space there will be, and I think we've in our adjusted expectations have encapsulated that. And the guys that I have at Cove help me with poking holes at my own thesis, right, or my own premise. And that's one of the core things that we do here internally, is to make sure that there's no expert fallacy and there's no expert bias, because we really hate it when there's the firms, sometimes firms have like the whatever analyst, right, the telecom analyst, the healthcare analyst, and then everyone in the room just turns to them and say, okay, well what do you think? That's not how we run Cove, and that's not what we do for diligence, and that's not how we make decisions. Like what would when would we sell it? There's always a price, right? I mean, I think that it is a compounder. I think every single day it gets more valuable. But if you told me, like, if I woke up tomorrow and I don't know, something happened and then all of a sudden it's worth $200 a share, I don't know. I mean, we're small cap investors. It's probably inappropriate for us to own something that's $15 billion or $20 billion anyway. So that's one way that it exits the portfolio. Another way is, we are shown that through data, right, factual data, that we're incorrect in our assumptions on in-flight Wi-Fi growth, that we are incorrect in our assumptions on the defense side growth, and we are incorrect in our assumptions on their defensibility in the residential broadband. If that starts happening, I'm gonna be like, okay, totally wrong. I'm sorry, apologize to our clients and take our medicine. But until that happens, until that the data comes in that disconfirms what we believe to be the growth trajectory here, there is no reason to sell it, because again, I really do believe this is a compounding machine. It's not a gram. It's not a point-to-point trade. Ben, I don't know if you have any.
No, I mean, we keep Eugene on his toes. I mean, this is our second largest position in the strategy that I co-manage. Every day I'm looking for disconfirming evidence, and for sure there's a lot of hype out there that is suggestive that Elon is going to eat everybody's lunch. And as we've said over and over again, we think that there's room for multiple people to be successful. But when you focus on the hype, what you do is you miss the nuance, and the nuance is that what we started with, that Viasat is going to be an in-flight Wi-Fi and military-oriented company in 3 to 5 years, and that is plenty for us to have a much higher stock price. And from here, it's just patience. And could some things happen in the intervening period? Absolutely, we will take that data and the price of the stock and consider it. But I look at this as a multi-bagger, in the sense that we're value investors. What we usually do is we look at what is, and we value what is, and we don't bake in anything for the future, and we hope that we're buying growth for free because it's trading at a discount to intrinsic value on what is today. I think with Viasat, you have to look around the corner, and people are just not great. And then you could look at something like whether it's Amazon or Shopify or some of these businesses that have just created their own TAMs that people couldn't even imagine 10 years earlier. You have to look around the corner and you have to skate to where the puck is going. And where the puck is going is more use cases, more demand, and incumbents who have legacy assets that will not be competitive in 24 months. And that's it. And why wouldn't this be a forever stock? And that's kind of the way we look at it.
Well, you touched on one of the reasons to sell might be potentially one reason that I love referencing, which is getting tomorrow's price today, right? So let's talk a little bit about that and close out there with your sort of overall intrinsic value assumption, or even the discount rate, the IRR you're looking for with this stock, and where it kind of sits relative to today. Because as we mentioned, the stock is in the low 50s at the time of recording, but it's been as high as 100, right? So it's not unreasonable thinking go much higher from here, even though it's had a decent run up to date. So what is what's the yield you're estimating out of this particular pick, and how is it relative to the stock today?
Yeah, we think of typically underwrite things in 3-year chunks. The really annoying thing here is COVID. Besides the in-flight Wi-Fi issue, it delayed the launch by now it's coming up to almost a year. Supply chain issues because people just literally not being able to be at work, or getting sick, and so having to close down their clean rooms and things like that. It's just, and also the supply chain was disrupted. I mean, it really delayed things immensely. But from here, if we just assume a normal cadence and them launching the EMEA one 6 months after this first Americas one, and then the APAC one another 6 to 9 months after the EMEA one, we believe that over the next 3 years, you could see a upside of somewhere between $120 and $150 a share. The intermediate level, I would say, we don't typically we won't talk like this internally, but for your listeners, once the America's one is launched and the revenue profile starts adjusting to the new revenue opportunities that they've set up for the America's one, we believe that the intermediary stop will be in the 80s. And then, you will get the full upside over the next year and a half after that, following the EMEA launch, because EMEA, that revenue will be de novo revenue, meaning like they have America's revenue right now, right? And so whatever they can get is additional revenue on the America side, which you can argue like, well, let's say they're not going to get as much on residential and they're just going to be defensive. It won't be actual real grower, which I think are fair points. But on the EMEA side, it will literally be like brand new, like, oh my God, all of a sudden you wake up and they have an extra 250 million of revenue flowing through. And then, you'll see the bump up in cash flow from operations. And then that's actually the inflection point. You'll start seeing them generate free cash flow. And I think once that happens, it'll solve the problem of what everyone points out, which is, hey, look, these guys, they've been, building these things. That's fantastic. But how do we know that they're actually successful? Because in the end, there's been no free cash flow generated. And I think once the EMEA one is up, the CapEx should normalize somewhere around $600 to $800 million is our assumption. And you'll start generating a decent amount of free cash flow, and it'll actually deliver and allow them to do other things. Whether it's add-on acquisitions or returning cash flow to shareholders in some way. So I think that's kind of the progression of the upside that we're assuming.
Fantastic. Well, Ben, Eugene, I always enjoy talking with you guys and digging in deep on these picks because it's just fascinating. And I mean, there's just something so exciting about this race for space we're witnessing and alive for today. And I'm going to really enjoy the progress of both Starlink and Viasat. So I want to, before we let you go, I want to make sure we give a handoff to Cove Street, any of your social platforms or any other resources you guys want to highlight.
Yeah, thanks. We definitely are out there. We're not some opaque hedge fund that doesn't talk about our positions. We're happy, as we talked about with Lumen with you and Viasat here. So if you go to our website, covestreetcapital.com, and go to our thoughts tab, you can see any number of interviews and discussions that Eugene and I have had. If you're on Twitter, I've reemerged on Twitter over the last 6 months, and you can find me the Inoculated Investor. I'm pretty active on Twitter as well. But we approach everything with a fair amount of humility, and we understand that with both Lumen and Viasat, we are making very contrarian statements that other people may have, very applicable and coherent questions about. And so we're always happy for people's feedback. So reach out to us, find us on the website and reach out to us if you have feedback or questions, because we're always interested in people's perspective, especially if they know these companies or these industries well. We will incorporate their information into our own mosaic as well.
All right, gentlemen. Thank you again for coming on the show. Hope to do it again soon.
Thank you, Trey. Really appreciate the time.
Yep.
Cheers.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.